that came out with a set of numbers, eClerx. The numbers look rather weak. It missed estimates for the fourth straight quarter, actually. We're now joined by Mr. Gupta, the CFO of the company. Hi, Mr. Gupta. Thanks so much, sir, for joining in. Just looking at the numbers, fourth straight quarter, we're seeing a bit of a decline. The revenues are down by around 3.5% approximately. What's the outlook? How many quarters more should we expect such a subdued performance? And if you could help us out in terms of some guidance for FY18.
So the downward pressure started actually at the start of this year, and we still foresee that 2 more quarters will be equally weak, or similarly weak. As far as FY18 is concerned, based on our current visibility, we can say that beyond Q1, we don't have any outstanding or known pressures left.
All right, but we should brace ourselves for at least 2 more quarters of a degrowth?
That's right. It will be in the similar ranges that you have seen in the past. Yeah.
All right. If the remainder of FY18 is looking stable, then what kind of a number should we work with? Because FY17, by the time we wind down, will look quite ugly.
So it's very hard to predict in the current environment to give a number for FY18. But I would say we should see some amount of growth in FY18 over a very weak FY17.
Single-digit growth?
I won't like to put a number as of now, but we are definitely hopeful for a modest growth.
All right, let's be optimistic then on that front. But what about the margins? There are EBIT margins now at around 28% approximately. I think earlier we were working with a number of from 31 to around 33%. What's going on that front? 28%, have you seen the worst of it? Do you expect further pressure?
So, this year at the start, we adopted Ind AS as per the regulatory guidelines, and that creates some bit of choppiness because you have to adopt you have to make some first-time choices when you are adopting, and that has an impact on Q1, and subsequently it wanes away. So I would say that the YTD number is much more representative, which is around 32%, and as far as 28% number is concerned, that is the more reflection of the fact that we are in the degrowing environment, and we do have some cost cliffs as the revenue rolls off. Your people cost doesn't go down so proportionately. So to that extent, the full year we are still expecting above 30, and we anticipate similar for FY18 also, even factoring the current environment.
All right, so expecting to hold on to that 30% EBIT margin.
Yes.
So just to get a broad sense, Mr. Gupta, for FY18, we should do what, around 1,500 crores approximately in terms of a top line at least, and a 30% margin. So we're working with around a 450 crore in terms of an EBIT number.
Yeah, I mean, your calculation sounds right based on the assumptions.
All right, Mr. Gupta, what about your cash balance? What's it at? I think it's at around 550 crores approximately. I think you've done a buyback in the last quarter as well. Any further plans in terms of this utilization of cash, maybe some inorganic growth, or what's the plan basically?
Yeah, I think, we have always looked out for attractive opportunities for inorganic, and we have been continuously looking for it, for last 1 or 2 years. For us, the last acquisition, CLX, has played down according to the script, and the integration, which was very light, is already way back. So I think we are prepared in terms of intaking any new opportunity that may arise, and we are very aggressively looking for things in digital and a few other areas.
All right. Thanks so much, Mr. Gupta, for joining in and, in fact, giving us those details. Well, so the management sounding reasonably confident.